Hello, everyone. Thank you for joining our webinar today. I am going to give a brief technology introduction and highlight some of the platform features before we get started here. The webinar is being recorded today. We do have a chat panel available for questions, comments, and if you have any tech issues, and you can see the panel on the left side of your screen. Most tech issues can be resolved with refreshing your browser. And if the presentation or speakers are lagging or frozen, that might be due to your internet connection, and you can try to refresh the page. And if you do accidentally close the chat, video, or slide pods, you can restore your screen by clicking on the restore icon, which is at the bottom. You see the row of blue buttons, and all the way to the left is the rewind icon. And you can click that and it'll restore the pods on your screen. And so with that, I will pass it over to Patty Ryan to get us started.
Hi, thanks so much, Sarah. And we're so excited that you've all joined us today. If you're looking in the chat, we truly have family child care providers from all corners of the United States. So welcome. And we want to let you know this webinar is being brought to you by the National Center on Early Childhood Quality Assurance. The center is funded by the U.S. Department of Health and Human Services, the Administration for Children and Families, the Office of Child Care, the Office of Head Start, and Health Resources and Services Administration. During this 90-minute webinar, you'll hear from Tom Copeland. Many of you know he's one of the nation's leading experts on the business of family child care. And we're also joined by our partners with all our kin. Today, we'll share valuable information about the Paycheck Protection Program and the economic injury disaster loans, federal resources that are designed to support all small businesses, such as yours, family child care businesses, as you navigate these challenging times. And we're so grateful to have worked with the Office of Child Care to bring you this webinar. And it's my pleasure now to introduce Ellen Wheatley, the Acting Director of the Office of Child Care, who has a few words she'd like to say. Ellen?
Thank you, Patty. Hello, everyone, and welcome to this wonderful webinar. I know you will learn a lot from it, and during these times, you may have experienced some difficulty with getting the income that you need because parents aren't able to bring their children, or you're not able to have as many children as you used to have. Regardless, these programs that Tom will talk about today will be very, very helpful. I'm a big believer in family child care, having used it in Dallas, Texas, Chicago, Illinois, and Merrimack, New Hampshire. And now my first granddaughter is in family child care in Worcester, Massachusetts. I know that family child care is the first choice for many, many families and is the backbone for all areas of the country. And I'm very glad that you have committed to providing child care in very small groups in your own home in a way that is nurturing and gives children what they need to get started in life. So thank you to all of you, and please enjoy this webinar. Patty, back to you.
Thanks so much, Ellen. I want to share with you again just 3 important notes before we begin. One is this webinar is being recorded and will be made available for your access. And the second, as we mentioned, we have thousands of family child care providers from across the country. So during the webinar, we're encouraging that you put your questions in the chat. Tom is poised to answer as many as he can, and while we won't probably be able to get through all of them, what we will do is create an FAQ, a frequently asked questions resource, and make that available to you also after the webinar with the answers to the questions that we weren't able to get to during this webinar. And then again, we'll show you how to access all of the information that Tom will and all our kin will talk about today at the end of the webinar, so that you will make sure that you know where to go to get all of this important information. And now I'd like to introduce all our kin, one of ECQA's partners, Jessica.
Hi, everyone. This is Jessica Sager, CEO of All Our Kin. It is truly an honor to be here today with all of you, with our friends and partners at NECQA, and with the amazing Tom Copeland. All Our Kin is a staffed family childcare network. We work with about 1,000 family childcare educators across New York and Connecticut, and we've demonstrated the impact that staffed networks like ours can have on the supply, quality, and sustainability of family childcare. We also train agencies around the country in our model, and we're honored to partner with NECQA in this work. Right now, family childcare educators are struggling to stay afloat. We know how hard you're working to keep your programs going for children and families. We're really glad that Tom's here to share information about the PPP and EIDL. We also have some technical assistance offerings that might be useful to you, like a training series focused on how to run a successful family childcare business. We'll be sharing information about these as a follow-up. Finally, I'm joined today by Jane Lee, a family childcare business coach with All Our Kin. Jane will be supporting the conversation, monitoring the chat, and gathering your questions. But really, most important, we want to say thank you. Thank you, thank you, thank you for everything you're doing. You are truly heroes to so many, and we are very grateful. And now it is my pleasure to turn the conversation over to Tom Copeland.
Thank you. Thank you, everyone. Welcome. So take a deep breath. We're going to talk about a lot of different things here. These programs can be complicated. People can be frustrated when they're trying to deal with them. So I understand that. There's going to be lots and lots of questions I'm probably not going to get to, but that's okay, because we're going to follow up with a Q&A later that I'm going to post on my website that's going to be available to everyone. So don't worry if your specific question is not answered. I am coming to you from my home office in St. Paul, Minnesota, where we're expecting 4 or 6 inches of snow in the next hour or two. I'm an attorney, a trainer, an advocate, an author, trying to help family childcare providers be more successful as a business. I've been doing this for a long time. If you have questions after this session that I don't get to or you don't see later posted on my website, send me an email, tomcopeland@live.com. I have a website, tomcopelandblog.com, which is where I'll be posting these Q&A, and I'll be posting a copy of the recording of this webinar and a copy of these PowerPoint slides as well. This should happen early next week. I'm writing hundreds of articles on all aspects of the business side of family childcare. Your general questions might be answered there. Every time I post something on my website, it will appear on my Facebook page. You can ask me questions on Facebook. I'm not doing your taxes. I'm not filling out the PPP forms for you individually. In addition, the SBA may issue further guidance about the PPP program after this webinar is broadcast. So this may change. I don't think so. I don't hope so, but it may change some things. If things do change, I will be writing about it on my website. We want to keep saying it's going to be recorded. This webinar is being recorded. Here's the website where you can get the recording, and an additional website where you can listen to this again if you'd like. So let's jump into this. The Small Business Administration, the SBA, has created 2 programs here. The Paycheck Protection Program, which I'm going to call the PPP. And that program has a first draw and a second draw that we'll talk about. Then there's the Economic Injury Disaster Loan, the EIDL, which has an advance and a loan. So this is what we're going to cover today. Let's first jump in and talk about the Paycheck Protection Program. What can you spend this money on if you get the money? You can spend this money on payroll costs. The word payroll can be confusing because you can pay yourself. And we get a lot of questions about this. You get the money, you can simply write yourself a check to yourself and then put it back into the same bank account. Or you can transfer money from one bank account to another. You could also spend this money on mortgage or car loan interest, on rent, on utilities, on food, and on expenses to comply with state and federal government guidelines about dealing with COVID. Here's how it works. You apply for the PPP by filling out an application form. You can get the application form from the SBA website. You can find it on my website. Or your lender might tell you to fill out the same application form on their website. You would submit the application form to your bank. You don't send it in directly to the SBA. You submit it to the bank or an online lender such as PayPal, Biz2Credit, Cabbage, there are others. After you're approved, the SBA will directly deposit this money into your account. You'll have 8 to 24 weeks to spend the money. After that, you can apply for forgiveness through your lender, which means you won't have to pay the money back. The PPP money is not taxable income. You can use it, as we've seen, for a whole variety of things. You fill out a simple application form. You'll get forgiveness, meaning you don't pay it back. So this is a deal. If you're eligible for it, I strongly encourage everybody to apply. All right, so here's where it gets a little tricky. There's a first draw and a second draw. If you may be eligible for either the first draw or second draw. If you did not get money from this PPP program in 2020, you didn't get money, you are eligible for the first draw. If you did apply and get money in 2020, but didn't spend all of it or return some of it, you can still get money under the first draw. Essentially, you get what you didn't get the first time. But if you did get money from the first PPP, if you did get money from the PPP in 2020, you're not eligible for the first draw. Instead, you may be eligible for the second draw. So I'm going to hit some highlights on this application form. This is showing the top half of the first page of the application form. And I want to focus on average monthly payroll, because here's where the questions and the confusion start. Notice it says $3,000 in here. We need to first determine how much you're eligible for. So in this example, it says $3,000. Well, where do we get that? Your average monthly payroll is really your average monthly, is your net income. It's your net income or profit, which is found on Schedule C if you're self-employed on the bottom line. Line 31 is your annual profit or net income. In this case, $36,000. That's where we start. Now, if you don't have a profit in 2019, then you would look at your Schedule C for 2020. You'd have to fill out a Schedule C for 2020 and use the profit from 2020. If you don't have a profit either year, you're not eligible for the PPP, and we're done. Well, how do we determine our average monthly payroll? Again, when they use the word payroll, think profit. So we're looking at our 2019 or 2020 Schedule C, line 31, all right? In our example, $36,000. We're dividing that by 12 months to get our average monthly payroll profit. So in our example, $36,000 divided by 12 is $3,000. That's our average monthly payroll. Now, there's a new rule this year that says if you, well, I guess it was also last year, sorry. If you had employees last year, And by employees, I mean people you paid payroll taxes for, all right? Not volunteers, not independent contractors. You did withholding of Social Security taxes. You had you paid federal and state income tax withholding on this person, and paid federal and state unemployment taxes. All right, you treated them as an employee by doing payroll taxes. If that's the case, you should see a number on line 26, which represents wages, and you can add that to your annual profit. So if your annual profit was 36, but we paid $10,000 in wages, we add that to it. Now it's $46,000 divided by 12. All right? Next. Let's go back and look at the previous form. And as soon as I figure out how to go back here, 1 and 2, there we go. So in our example, $3,000, all right? That's our average monthly payroll. The next box is how much we're eligible to apply for from the PPP. And the example here says $7,500. And that's because we're multiplying our average monthly payroll by 2.5. Don't tell me why it's 2.5. You multiply it by 2.5 to get $7,500. So let's go forward and see how this works. Whoops. Should you? I should have added this before. Our average monthly payroll. What else? You're now eligible to add your EIDL loan to the amount you can get from this PPP. What's going on here? If you got a loan last year from EIDL, all right, it was a 30-year loan payable back over 30 years at a 3.75% interest. Well, now you can add it to how much you're getting from the PPP, and if you do, it will turn into a 1% loan payable back over 5 years. Wow, what's going on here? It's not forgivable. You still always have to pay back the EIDL loan. But now instead of paying 3.75% interest, it's now 1%. Well, wow, that sounds like a great deal. However, now you got to pay it back within 5 years. And maybe you can't pay it back in 5 years. Maybe you don't want to pay it back in 5 years. So it's voluntary. Do you want to add it back? You can. You don't have to. If, as we're going along, you're thinking to yourself, Tom, wow, I got questions. Hopefully, you should be able to get some help, some advice from your local lender. That could be extremely difficult, and that's why I've written about this in much more detail on my website. So, here we go. How much will you get? Again, after you've calculated your average monthly payroll, multiplied by 2.5, the result is how much you can get from the PPP. So if it's $3,000, in our example, times 2.5 is $7,500. Now on the form, it then asks, how many employees do you have? So even if you haven't hired somebody, you are an employee for this purpose, so put 1 for yourself. Don't count independent contractors. Don't count people you didn't do payroll taxes for, right? If you did have other employees, add them 2, 3, or whatever. But you are 1, so make sure you put down 1. All right. And so I haven't gone through the rest of the form because the rest of the form is much less important. Forgiveness. Once you get the money, you have 24 weeks to spend it on the items that we've already identified. You've got to spend at least 60% of it on payroll. You can spend the full 60% on yourself. You can spend 100% on yourself. Or you can spend 60% on yourself and 40% on the utilities and the rent and the food, etc. Once you've spent the money, you ask for forgiveness so you don't have to spend it back. Now, last year, if you got money, you'll notice that you remember that they were reissuing different forgiveness forms that got simpler and simpler. And now, under the new law, they've really simplified this and said, okay, it's just going to be a one-page letter, essentially, that you're going to say, I complied with all the rules, signed yours truly, and you don't have to submit any documents. The SBA has not released guidance on this. They have not released a sample letter, so we're waiting for that. And once they come out with guidance on this, I will be writing about this on my website. So once you spent the money, you go back to your lender and say, okay, I want it forgiven. You know, tell me the process. They should take you through any form to fill out. They may ask for additional information from you, but you need to go through your lender to get this forgiveness. So I just talked about the first draw, so I know there's been a zillion questions, and so let me see if I can catch up here. If you have an employee, can you still spend 100% on PPP for yourself? Yes. You have an employee, but you want to spend all the money on yourself. Terrific. Yes, you can do that. What do you do after you spend the money on yourself? Can you use the PPP money to build a deck? No. To remodel your house? No. However, you write yourself a check for 60% or all of it. Now it's your money. Now you can turn around and do whatever you want with the money. You can buy the deck, you can remodel your house, you can do whatever you want with it and spend it on things that you couldn't spend it on directly with the money. So don't worry about what you can spend it on, because you can spend it on yourself and then do whatever you want with it. Yeah, got the PPP on the first round and the EIDL advance, which we'll talk about in a second, $1,000. Under the old rules, if you got the $1,000 from the advance and got the PPP, you had to reduce your PPP forgiveness by the $1,000 advance. So now you turn back some of the money to your lender. If you turned back $1,000 to your lender last year, or they're asking for it back now, the rule changed, and they should give the money back to you. So contact your lender and say, wait a minute, I gave you $1,000 back from the PPP. You need to give it back to me under the new rule. So talk to your lender about getting your money back. Even if we pay an independent contractor, we can't borrow money to pay them for when we are closed. Well, remember, you can pay yourself, and then you can use that money to pay an independent contractor if you want. Independent contractors can apply for the PPP themselves. Okay, what else here? Is there another round of EIDL or the same one from last year? There's another round which I'm going to talk about in a second. So let's see if I can catch up here. Lender means the bank, your local bank. To apply for the PPP, go to your local bank. And I'm going to talk about problems associated with a local bank in a minute. Or Jane, did you want to jump right in here?
Just a few questions that have gone by on the chat. And it's really just clarifications about whether a PPP would be appropriate for a family child care provider, even if they don't have any employees. And this is such an incredibly important question that we would just wanted to make sure that you were able to reiterate that.
Terrific. And jump in again, just like this in the future. Great. Yes, yes. People, you're a single provider. You're married. You don't have any employees. You want the PPP money. You do not need an employee to get the PPP. The language on the form, payroll, and some other language, you say, well, that's not me, that's not me. Yes, it is you. If your bank, a lender, somebody tells you, oh, no, you can't apply for some reason, they're just wrong. For this PPP, for the first draw, if you didn't get money before, you are eligible. You are eligible as long as you show some kind of profit. So apply for the PPP. All right? Great.
Thank you.
All right. If you transfer money from one account to another, does that count as paying yourself? Yes, as long as you just identify it that way. Now, so in your check register, you just say, transfer from business account, payroll. Or you're writing a note somewhere saying that's payroll. So if people can see, the bank can see there's money going from one account to another, you're just saying, that's my payroll. And since you can use all of it for payroll, this shouldn't be a problem. All right. Okay.
And there were a few questions about what goes into gross income.
Yeah. And that's a question for the second draw. Because on the first draw that we're still talking about here, we're not looking at gross income. We're looking at net income or profit on the bottom of Schedule C. That's part of the confusion between these two programs. First draw, we don't care. Nobody's going to ask you about gross income. Second draw, as we're going to get into that, then there is a question about gross income. Then it does become important what your gross is, and we'll explain that later. All right. This is helpful, Jane. Can we go to a credit union? Yes, you can go to a credit union. Not all banks may be accepting applications. Some banks might just say, we don't do this. But it can't hurt to find out and to ask. I'll be talking about problems associated with banks later.
And there were a few questions about 2019 versus 2020 taxes, and what if you don't have 2020 taxes?
Yeah, so this is a biggie. Number one, you could file your 2020 taxes, and now you would know what your profit is on Schedule C. The deadline to apply for this loan is March 31st. We don't know if they're going to run out of money again, like they did before. So I would urge you to apply sooner rather than later. I mean, March is late. So now what? Well, you can still apply for the loan, even if you haven't filed your 2020 taxes, as long as you fill out Schedule C for 2020. Now, not so easy. If you're doing taxes yourself, I'd say get on it and fill out Schedule C. In order to fill out Schedule C properly, you also need to fill out another form, Form 8829, Expenses for Business Use of Your Home. That's where you're claiming house expenses. And those are expenses you must claim. They will reduce your Schedule C profit. So, okay, now you have to fill out this other form. Well, you shouldn't be guessing. You don't want to be guessing numbers on this form. You should be able to say, this is the form that I would send in with my taxes when I'm ready to file my taxes. If you can do that, you want to do it now. So then you can use the 2020 numbers. If you've done that and your 2020 profit is higher than your 2019 profit, then great, you want to use the 2020 profit. If you can't accurately fill out the Schedule C for 2020, then rely on your 2019 tax return. All right? Can we use our, Jane, this is going to be helpful if you can catch as many questions as you can as I'm going along, because they're zooming by.
Yes, they're very fast. So if I don't have a business account or an EIN, can I use my Social Security number and a personal bank account to apply for the PPP?
Yes, you can use your Social Security number to apply for the PPP. You're not required to have an EIN or an employer identification number. I strongly recommend that everybody get an EIN because you want to protect your Social Security number from identity theft. You can get the EIN from the IRS website in like 10 minutes. It's free. You just get it at the end of filling out a few screens. So if you have an EIN, use that. If you don't, use your Social Security number. You can still apply without the EIN. Does your credit score matter when applying for the PPP? No. Will it hurt your credit score if you apply for a loan? No.
And we had a series of questions about dates. When did you have to be open? What happened if I opened in 2020, or what date, etc.?
Okay, thank you. This is helpful to me. So, in order to be eligible for either the first draw or the second draw of the PPP, your business has to have been in operation by February 15th, 2020. If your business started after that date, unfortunately, you can't apply for the PPP. Now, I'll talk later about some state money that you might be eligible for, but you're not eligible for this program. Okay. Right. Somebody says if they change their company name, does that change their ability to apply? No.
I just received forgiveness for PPP this week. Can I still qualify to apply for the first round?
No. You got the PPP last year, assuming you didn't give any back, assuming you applied for everything you were entitled to, then no, but you might be eligible for the second draw.
Now, if I applied for a PPP first draw now and use those proceeds, do you think I can apply for a second draw in March?
Well, there's no guidance on this. So Jane is asking me a tricky question. Maybe. Here's the idea. You apply for the first draw. You get it. You spend it before March 31st. Then can you apply for the second draw? Yes. Can you apply for the first draw? Again, I don't want to answer that. I don't know that you can. So here's what I can do. If you want me to try to figure that out, send me an email, tomcopeland@live.com, and I'll see if I can get an answer, because I don't think there is a clear answer at this point. All right? Let me go ahead.
If I work with my husband, and if I pay my husband, does that mean I have an employee?
So you can pay your husband. However, for him to be considered an employee, you must have withheld Social Security taxes. You need to treat him as an employee, withholding Social Security taxes. Were you required to get workers' compensation for him? In New York, you would. Did you withhold federal and state income taxes? You probably were not required to get any federal or state unemployment taxes. Okay. Did you file quarterly 941s and annual W-2s and W-3s? Did you do all the trappings and the Social Security taxes? Did he report that as income and pay taxes on that? If you can say yes to all of that, then yes, he's another employee.
And if I was denied the PPP last year, can I still be eligible this year?
Yes. You didn't get the PPP last year. For whatever reason, you were denied. They ran out of money. Something happened. You didn't get it. So you are still eligible for the first draw. All right? Okay.
And Tom and Ann,
Yeah,
this
Patty.
is Patty. I just wanted to share with the audience, our goal today was really to give you information and raise your awareness about both the Paycheck Protection Program and the Economic Injury Disaster Loans, because they are available to all small businesses, including family child care. We will make this webinar available, and we know that you will not leave here with all of your answers or knowing exactly what to do. You'll be able to rewatch the recording and access lots lots of resources after this webinar so that you can be poised to apply for either the PPP or the EIDL. But I wanted to make sure folks knew our objective was really to raise the awareness and give as much information as we can. Thanks.
Great. All right, so let me move on here a little bit. Second draw. Okay, well, if you got confused so far, this is not going to help. If you received the PPP last year, you now may be eligible for the second draw. For the first draw, you didn't get money before, you are eligible, you can get money. But in this case, if you got money last time, you may or may not be eligible for the second draw. So, there's the application form is a little bit different. Again, this is the top half of the first page. And we've got the same average monthly payroll here. That's the same question, $4,000. So let's look at that. So we're calculating that the same way. You're looking at your Schedule C, the bottom line, and let's just say now it's $48,000 profit for the year. We're dividing it by 12 months, and our average monthly payroll profit, remember, is now $4,000. Now, this form doesn't allow you to add in that EIDL loan amount into this 48,000. So I haven't seen any guidance on this, but since the form doesn't allow it, I assume you can't. You can't roll over an EIDL loan into the second draw. Again, we're multiplying our average monthly payroll profit by 2.5, and therefore we're coming up with $10,000. So back to the form, now we got $10,000. Next box, that's where you're putting 1 for employee for yourself. All right, so now here's where it gets complicated. We're going down here, and I know you can't read it very well, but now we're dealing with whether or not you're eligible. And essentially, your profit, your gross income for 2020 has to be at least 25% less than your gross income from 2019. And this is where it's being filled out. So let's move on to see what this looks like. Well, what is gross income? We're not talking about profit anymore. We're talking about gross income. Again, on your Schedule C, now this will appear on line 7. This is income before expenses. This includes all money from parents, registration fees, late pickup fees, supply fees, you're giving me a headache fee, money you get from the subsidy program, money you get from the food program, but money for your own children is not gross income. State grants, that's a biggie. Any money you got from your state, whether they call it a stipend or a grant or whatever, money showed up on your front door, if you got it from the state, it's gross income for purposes of the second draw. However, if you were receiving federal or state unemployment, that is not gross income for purposes of the PPP. It is income for tax purposes. You will owe tax, federal income tax, on unemployment benefits. All right, that can be confusing. You're going to have to pay taxes on it, but it does not count as gross income for your business because unemployment is considered personal. So, shorthand, look on Schedule C, line 7. That's your gross income. All right, so now you got to compare your Schedule C, line 7 from 2019 to your Schedule C, line 7 from 2020. And here's the directions on this, and the math, and it can get confusing. So here's the simplest way I can think of to explain this. Let's say on your 2019 Schedule C, it says $60,000. That's your gross income. Multiply that by 75%. In this example, it's $45,000. This means that your gross income from 2020 has to be less than 45,000 for you to be eligible for the second draw. So if 2020 line 7 is 40,000, hey, you're eligible. But if it's 50,000, oh, it's more than 45,000, you're not eligible. Now that's if you're comparing the full 2020 with the full 2019, all right? But there's another way to make this happen. You're comparing quarters, quarter to quarter, all right? So if any quarter in 2020 is 25% or more less than any corresponding quarter in 2019, you're eligible. A quarter is January to March, that's the first quarter. April to June, that's the second quarter. July to September, that's the third quarter. October to December, that's the fourth quarter. Now note that these are not the same as federal tax quarters. Holy Toledo. If you're filing estimated taxes quarterly, you'll note that those are not the same months. But these are the months that you see here when we talk about a quarter. So let's say in the third quarter of 2019, from July to September, your gross income was 14,000. We multiply it by 75%. That means your gross income for that third quarter in 2020 has to be less than $10,500. And so if it's $10,000, you qualify. Now, pay attention. Maybe you got a state grant last July of $5,000, and that kicked you over the gross income qualification amount here. All right, so you don't qualify for the third quarter, but maybe you qualify for a different quarter. So if it doesn't work for one quarter, try it for another quarter and pick whichever one that works for you and apply based on that quarter. Now, how do you know what your gross income is for any particular quarter? Oh, man. What we're looking for is how much money you earned for that period of time. I'm sorry, let me change that. How much money you took in, you received, not how much you earned. So how much money was deposited into your bank account? So if all your business income went into one bank account, you would look for January through March, go through your bank statements for those 3 months, how much money came in. And you need to know, how much of this was business income, how much of this was something else, all right? That's one way of looking at it. If you use the KidCare online software program, you can run quarterly reports that will tell you how much income you put into the software. And if you're putting in all the income into the software, that's what will tell you the result, all right? So this is something providers aren't used to doing, looking at your quarterly gross income. But that's what you want to do. So subsidy money, food program money, grants, parent money. Look at your bank statements. That's the simplest place to look. All right? Now, let me go back. One more. Okay, here we go. So this is the most difficult part, I think, to fill out in this form. Down here at the bottom, it says 2020 quarter, and then next to it, the same 2019 quarter. So you could put down for the whole year, and you just put down 2020, whatever the number is, and then the same thing at the top here, 2020. In this example, we're using the third quarter in our example. So we put 3Q 2020. And then we need to put 3Q 2019. So I would start with putting in 2019, 14,000. And then, as I said, if you multiply that by 75%, that will tell you that the number you put in under 2020 has to be less than that number. So in our example, it's 10,000. And that's less than 25%. And so therefore, you're eligible for the second draw. Wow. And one other thing I want to point out, on both forms, it's asking you the purpose of the loan money. And you can check a bunch of boxes. You want to for sure check payroll costs, because remember, that's you. That's paying yourself. So absolutely check that. But it doesn't matter how many other boxes you check. I would check these other boxes here: rent, mortgage, utilities, covered operational expenses. That could be your PPP stuff, or covered supplies. That could be food. That could be PPP protective equipment, your thermometers and gloves and so on. So, just check these boxes. I don't think it's going to make a big difference, but absolutely check payroll costs. All right, Jane, can you help me out here with some questions?
So we had a question about whether you can pick first draw or second draw.
No. You didn't get money last year, you have to pick first draw. And you want to pick first draw because you don't have to worry about all this gross income stuff. If you got money last year, with a small exception of you returned some of it, you didn't apply for all of it, then you're not eligible for the first draw. You have to do the second draw.
Okay.
Can you be denied let me just jump in. Can you be denied forgiveness? The only way is if you didn't spend it on what you should have spent it on. Just spend it on yourself. Or if you're going to spend it on something else, rent, utilities, you need to show receipts for that. And so if the bank is saying, show me the receipts, and you don't have the receipts, and you didn't, you just screwed up, then they could deny it. But otherwise, no.
We have questions about businesses that were open on or before February 15, 2020, but after February, the business closed. Can you still apply for the PPP?
If you're permanently closed, the answer is no. If you closed in March because of COVID and are planning to reopen, you're just waiting for the pandemic to pass, you're waiting till you get vaccinated, and you didn't reopen in 2020, but are still planning to reopen in 2021, then the answer is yes. Permanently closed, no.
A question about whether you can use the PPP proceeds to pay all of your mortgage or just the business portion.
For the expenses other than payroll, it's the business portion. It's your time and space percentage of mortgage loan interest, rent, utilities, and so on. The time and space percent is a whole nother discussion. Go to my website if you don't know what time and space percentage is, but it's essentially the business portion of these expenses, not the full amount. Somebody asked a question about the NAICS code. What the heck was that? It's 624410 up here in the form, both forms. That is the number associated with childcare. So everybody would put down that number. That's your code number.
And if
you're
I'm
using
paying
100%, if you're using 100% of payroll for yourself, you have to show receipts. No, you just have to show that you wrote a check to yourself. That's the easiest way. Or that you transferred it out of the account where you got the money into some other account.
And this was a question from before. Can you pay yourself in one lump sum, one check, or do I have to write multiple checks each week or month?
I don't think there's a rule about this, but I certainly would write multiple checks. I mean, the government, everybody looks in terms of payroll, and they're thinking about every other business except self-employed people. And so for any other business, paying the $5,000, whatever you got in one check, is that how you would pay an employee once? I don't know that it makes any difference. I think it would be just easier so you don't get any questions about this. Write yourself a number of checks. Write them over at least 4 or 5 weeks at least.
And Tom, this is Patty and Jane. Just some very basic questions I've seen come through. Again, how do folks, if they want to apply for a PPP loan, where do they apply?
They go to their local bank or go to an online lender such as PayPal. If you go to my website and look at the articles that I've posted recently about how to fill out the first draw form, how to fill out the second draw form, I've included links to several online lenders, Biz2 Credit, Cabbage, PayPal, there are others.
And the first draw is available now. When
Yes.
will the second, when will they be able to apply for the second draw?
Now, it's possible that there might be a bank that says we're not ready to accept applications now, but the SBA program has opened it up for people to submit applications. So some banks started 2 weeks ago, some banks started this week, maybe some banks won't start till next week, but the program is open now. Are you guaranteed forgiveness? So people are worried about this, like, I don't want to take money if I'm going to have to pay it back, or I'm going to get into trouble if I don't do the right thing, or something like that. As long as you spend the money on what you're supposed to spend it on, meaning just spend it on yourself for payroll, you're guaranteed to get forgiveness. So don't hesitate to apply.
In terms of lenders, it seemed as if some lenders for second draw are inviting folks to apply. So it may be that your lender may be sending you an email, so you can check with your lender.
Ah, okay, right. So problem with banks. So let's talk about this before I start talking about EIDL, and then I'll take a few more questions here before I move on. I've been hearing about this. This is a big problem last year. I think it's still a problem this year. Some banks are saying, we won't accept your application from us unless you have a separate business bank account with us. The SBA does not require this. Local banks are requiring it. And what I've heard about so far is Wells Fargo and Bank of America. There may be others. Maybe your local branch of Bank of America is accepting them. I don't know. But I've heard pretty consistently from Wells Fargo people that they're not allowing me to apply unless I have a separate business bank account. Well, this is unfortunate. It's a shame. It's a shame on Wells Fargo. If your bank is saying that, then you need to move on and then go to another local bank who might help you out without a separate bank account for business, or go online. And that's the simplest way to go. Now, the problem is some providers are going to have trouble going online because they're not comfortable with going online, or they don't have internet access or whatever. And all I can say is, if you're a provider in that situation, well, you're already listening to me now, so presumably you're online. But if you're dealing with a provider who's struggling with this online process, then see if somebody else can help them out. Either somebody else can use their internet access, or somebody else can help them go to another online bank or another brick and mortar bank. You're not required to have a separate business account as a child care provider. Before you set one up, you should watch out to see, are they going to be charging you extra fees for a business bank account? Now, when I went to my local bank after we moved, I said, okay, I want my personal bank account. Fine, okay. And then I was going to open up a bank account for my business, but I realized they were going to charge me a monthly fee, and I didn't want to pay a monthly fee. So I said, okay, my second account is my house account. My house account. And they said, fine. So I have two personal accounts. One of them I'm running my business through. The other one I'm running my personal stuff through. So I don't know if your bank will go for that. That's another way to go if you don't want to pay fees associated with business bank accounts. All right. Questions, more questions here. Let me move on first. All right. So now let's say something about EIDL. there's a lot less to say about EIDL. There are two programs in dealing with EIDL. One's called the Advance, and one's called the Loan. All right? So, the Advance. Here's the problem. Last year, there was the EIDL Advance that you could have gotten $1,000 for yourself, spent it on whatever essentially you wanted, including paying yourself. It was forgivable. You don't have to pay taxes on it. Great. Pretty straightforward and simple. If you had an employee last year, you could add on another $1,000 for each employee. Well, this year they made it much harder. To get this $1,000 this year, you have to live in a low-income community and show that you have at least a 30% reduction in your gross income for an 8-week period beginning on March 2nd, 2020. Oh man, what are we talking about here? What is low-income community? Well, I'll be writing about this shortly. However, the answer is you go to the U.S. Census page, you put in your address, you click on a box that says income, it'll tell you what percentage of low-income people live in your neighborhood, and it has to be less than 50%. I'm sorry, it has to be more than 50% of low-income people in your community for that to be low-income community to be eligible. And then you got to show this 30% reduction. Oh, brother, what a headache. Now, the problem is the SBA has not yet opened up applications for the EIDL Advance. So that's why I haven't written about it yet. And I'm waiting for the SBA to issue some more guidance. And when they finally open it up, I will write about it. Now, for both the EIDL Advance and the EIDL Loan, you apply directly to the SBA. You don't go to your bank. Don't talk to your bank. You're going directly online to the SBA website, sba.gov. And you'll, at the top, it'll talk about coronavirus relief. And you click there, and it'll show you information about PPP, meaning the application form, and then EIDL. And you go to EIDL, and there's this online application form. Now, I did an instructional video last year about this form. It looks like it hasn't really changed much, but I'm going to wait. Next week or so, I'm going to write about the EIDL loan. It's a loan that you'd have to pay back. It's a 3.75% interest on the loan. All right? You can spend it on just about any business expense, including payroll for yourself. It's not taxable income. It's not taxable income, but you got to pay it back. And if you want to, you can pay it back faster than 30 years. Here we go. I forgot I put this up here. So you're going to the SBA. Here's the website. Here's the online form. If you want to look at it, if you want to take a shot at filling it out before you get my instructions, that's fine too. As I said, I'm going to be writing about it. But it's the Advance. We're not ready to apply for that. Okay, let's take some more questions here.
Tom, we had a question about EIDL and refinancing to the PPP, which of course was the first draw PPP loan. Now that we've gotten a sense of the EIDL loan, who should be refinancing and under what circumstances? And would you recommend that?
Well, the only way you could refinance is if you're going through the first draw. So, and adding it on to how much you're getting under the PPP. That's essentially refinancing the 3.75% into the 1%. But other than that, you can't refinance the EIDL loan. The SBA is not going to refinance it. It's not through your bank, so your bank's not refinancing it. So you're stuck with the 30-year loan. Okay? Mm-hmm. I do want as I see the time here, I do want to get to the end and cover just a couple more things here. So first, we got a poll question. And Patty, do you want to say something about this?
Yeah, sure. And Sarah, if you don't mind going to the, oh, this is great. As I said, one of the reasons that we wanted to do this was to see if to raise your awareness about family child care and the ability to access these important federal resources, both the EIDL as well as the PPP. So that's what this poll question, and then Sarah, if you'll take just a second after folks answer this, and we'll go to the PPP poll question, that would be great. And a couple things that I want to say. Tom alluded to the advance and the target of some of those advance funds. The nice thing about the package that was passed in December is it did target funds to businesses like family child care in areas of need, or businesses that were of more significant need, smaller businesses, businesses that maybe were not banked or didn't have the ability to access the initial funds before they were all gone. So again, I encourage you to find out as much as you can about that. On the website also is, you know, on all of our websites, Tom's blog, All Our Kin, we partner with First Children's Finance. Our website are links to the lenders that are assisting with the PPP. So I encourage you to go there if you did not yet apply. And then I just have one other question that came up on a previous webinar that we facilitated. And Tom or Jane, will you talk about what people might expect after they submit an application for the PPP and after they submit an application, if they do, for the EIDL? Who might contact them, how they might be contacted, how they might know whether they're accepted or not. Thanks.
For the PPP, if you have questions about whether or not your application was accepted, contact your lender, contact the bank. They may tell you, yeah, it's been accepted. Maybe they won't communicate because so many people are applying. But to find out whether it's been accepted, contact your lender. Assuming it's accepted, the next thing that'll happen is money will show up in your bank account. It'll just show up. It's like one day, hey, there's $5,000, $10,000, and that means you got the money. So it's basically that simple. But if you're worried about where's my money or where is it, did they get lost or something, you need to go through your lender. Sometimes you might submit your application on a Wednesday, but it may take 2, 3, 4, 5 days before it's actually submitted by them to the SBA because they may be overwhelmed. But you need to get that information from your lender. All right, I want to go on and hit a couple other things. Again, here's contact information on my website to get more information. Don't give up. If you're starting this process and you come up against a roadblock, something you don't understand, somebody's telling you no for some reason, because unfortunately, I've heard already from providers who said, my bank told me this, and it's wrong. So, you know, you could reach out to me, send me an email, and I can try to tell you whether or not what your bank is telling you is correct or not. Let me say again, this money from the PPP is not taxable. It's not taxable. Now, I want a couple other things here. Totally different topic. Employee retention credit. I mention this because of the potential significant tax benefit if you have employees. All right? If you don't have employees, take a short nap until I get to the next slide. So if you hired employees, not independent contractors, they got to be payroll taxes employees, you may be able to get a 50% tax credit for up to $10,000 of employee wages. So if you paid your employee $10,000 and you were eligible, you'd get a $5,000 tax refund, essentially. So this is like a big tax incentive for having and keeping employees. Now, you're eligible for this only if you had to reduce the number of hours that you were open because your state government told you to shut down, or you had a significant decline in your gross income, meaning a drop of at least 50%. You lost a whole bunch of kids. You had to lay off employees. You had to cut back hours of your employees. You lost a whole ton of money, and because you were shut down. I'll be writing about this in the future to describe this in more detail. It only applies to you if you have employees. Not counting yourself. In this case, you do not count yourself. All right? We got another poll question. So, will you apply for the PPP? Will you apply for EIDL? Yes? No? I have no idea. I'm not sure.
Thanks.
Right,
and Tom, I just want to reiterate, although we're not finished yet and you're still going to answer some additional questions, and so is Jane, if you all are following the chat box, you know how quickly it's going and how many questions are going in. Remember that after this webinar, both on our website and then on our partners' websites as well, all of this information will be posted. Frequently asked questions will be posted. You'll have the access that you need to additional information and answers to your specific questions, whether they be about how to apply, about 2019 and 2020. So know that there's additional support that's available to you. And if ECQA, our center, is aware, we can also link you up with who we know in the States who are actually helping providers access these supports in your state, territory, or with your tribe. So again, what we wanted to do was make sure that you clearly understood that these federal resources are available to you as a family child care provider and could be very beneficial, again, as you navigate through these very difficult times. And we'll answer some additional questions, but I just wanted to make sure that everybody was aware of that.
Thanks, Patty. All right, a couple last things. I'm still going to answer some more questions, so hang in there, even though these are the closing credits. So again, this is my email address. I'm happy to try to answer your question after today. You may want to wait until early next week when I post, which will be a long list of questions and answers, to see if your question is answered there. It's my website, tomcopelandblog.com. That's where you'll see the recording of this, the copy of these slides, and the Q&A. And again, I'm on Facebook. You can follow me on Facebook as well. I've written a whole bunch of books on the business side of childcare, including several tax books. You can get more information about that on my website. And again, I want to thank the Office of Child Care and everyone else responsible for putting this together. Thank you again. And so, some additional questions. Help me out here.
So we have a great question about...
Oh, sorry, Jane. I just
No, go
wondered
ahead.
if the two of you might reinforce this idea of really making whatever is the best decision for the individual family child care provider.
Could you
Because
clarify
not
a little bit about
every
that?
opportunity, well, not every opportunity might be the best opportunity for providers. So where might they go, or how might they engage in that decision-making process?
So first of all, getting a grant from your state will have no impact on the PPP unless we're talking about increase in gross income when applying for the second draw. Getting a PPP loan, grant, first draw, second draw, will not affect your ability to get state grants. I should pause and say, wait a minute, every state might have different rules about that. But check with your state if you're applying for a grant to see whether or not getting money from the PPP or EIDL will have any impact on your eligibility to get state grants. Unemployment. This is a tough one. Maybe you're on unemployment. Maybe you're applying for unemployment. Will getting money from the PPP affect your ability to apply for or stay on unemployment? And unfortunately, the answer varies by state. Every state is all over the place. And I've looked at some state unemployment websites and I can't find the answer. And it's very, very difficult to get through, as you know, if you've tried, to call up your state unemployment office. So what could happen here? Well, either your state unemployment people will say, well, for the week you received the PPP money, that could kick you off of being eligible for that week for unemployment, but then you can go back and apply for the next week. Or your state might say, well, you have to divide the PPP money over the 8 or 24 weeks that you're spending it, and that may kick you off for 8 or 24 weeks. Or it won't have any effect on state unemployment. Boy, this is a tough one, and I just don't know the answer to that. If your profit is very small and you're not going to get much from the PPP, it may not be worth it to take the PPP money for fear that it's going to reduce or eliminate your unemployment. And maybe you'd be better off getting unemployment.
And there have been, thanks, Tom. There have been several questions about the type of license a family child care provider might have. Does that impact the ability to access either the PPP or the EIDL?
Good question. No. Whether you have a small group license, a large group license, whether you're legally unlicensed, you're exempt from your state licensing rule, you are still eligible for these PPP and EIDL programs. So don't worry about the category of your license, you're eligible. And if there are any child care centers here, child care centers are also eligible. And there was a previous video about applying for these programs for child care centers.
Hey, Tom, I've seen multiple questions about the tax consequences of the PPP and whether the tax consequence changes if I use it for payroll or for certain types of things.
Short answer is no. So you're getting, let's say, $10,000 from the PPP, all right? Not taxable income. So it's not going to show up as gross income or anywhere on your taxes. You take the $10,000 and you spend some of it on utilities, the business portion of your utilities or business portion of rent or mortgage loan interest. Fine. You spend $3,000 on that. You can still deduct that same amount of utilities and rent, etc. In other words, you do not lose any deductions by accepting and spending the PPP money. If you spend the PPP money on yourself, that's not a tax consequence. It's not income to you because you paid yourself payroll. It's not income to you. That's different than if you paid your employee If you paid your employee $3,000 with the PPP money, they would have to report it as income, and you could deduct it. But once you write a check to yourself, it's not income to you, and you don't deduct it. It's your money to begin with as a self-employed person. It's your money. You don't lose a deduction by paying yourself, and it's always not taxable income.
We seem to have questions about EIDL and whether people would be eligible for a second EIDL. If I may just share a story about an EIDL from one of our providers who used it really. She got the first EIDL because this was a source of income, because the daycare was a source of her income for her whole family, and she got it as an insurance. And so what she did with the EIDL money was to keep it aside. She didn't spend it, and she does expect to pay it back if she doesn't need it. But we've also had other questions about, well, if I have this really low interest loan, should I just get another one and maybe I can do some renovations in my home? What do you think?
Well, and we're talking about the EIDL loan now. And so, yes, this can be access to like a reserve account. You're socking away some money that you got so that maybe you could use for an emergency or something else. You cannot use the EIDL loan for fixed assets, meaning, or for repairs on your home. So fixed assets are things such as a fence, a deck, a patio, a home improvement. Now, remember what I said earlier, which was you can use the EIDL loan to pay yourself. And once you pay yourself, you can then turn around and buy the fence or the patio or the deck, right? So you just can't use that money directly for those items. Did I answer that question?
Yep. Thank you. And when when it would be advisable to get the EIDL. So.
Many providers don't have access to loans. That they can't take out a home equity line of credit because their income is too low. They can't, they're paying a much higher interest rate on some other kinds of loans. They have high credit card debt. They have high other kinds of debt. They get the EIDL loan, they pay themselves, and then they pay down their credit card debt. I mean, that makes a lot of sense. And so 3.75% interest you'd compare with what is the interest rate on other debt that you might have. And that would be a reason why it would make sense to get this loan.
Okay. Another text question. It's about the relief grants. Are those taxable? And how do I find out?
I mean the state grants?
Other types of relief.
Yeah. So your state may have given out stipends. Have you heard that word? Or grants, or relief, something or other, or COVID grants, or there's lots of different words. If you got money through your state, all right, not the PPP, we're not talking about EIDL right now. If you got money from your state, or through your local R&R, or through some foundation, or it's income. You gotta report it as income, right? You can turn around and spend it on business stuff. You can buy toys, you can buy equipment. Your state may have some rules about what you can spend it on and what you can't spend it on. But whatever you do spend it on, you can then deduct. So you got $1,000 cash grant, and they allow you to spend it on anything. And you spend it on toys just for the child care, and your kids are in college. You can deduct $1,000. You'd report $1,000 of income, you'd report $1,000 of expense. Some states may issue a 1099 form to you indicating how much you got from them. Whether they issue a form 1099 or not, it's still income. They should be issuing this form by the end of this month. They might not, but that is not going to make a difference. There's this new federal money, $10 billion, and it's quite likely that a lot of that's going to go into grants. I've heard that in Minnesota, they're going to use half of the new money and use it in the same way they used it last year, which mostly went for grants. And I don't know what they're going to do with the other half, but we're talking millions upon millions upon millions of dollars for each state. So it's quite likely that you might have the opportunity to get a grant this time around. So pay attention, apply for it, you want it.
And thanks, Tom, for that. And it is true. And the funds that we're talking about today, are federal funds that are being made available to small businesses across the country, in states, territories, and tribes. And again, targeting with specific funds, targeting small businesses in need. And in particular, many of the small businesses like family child care providers who maybe were not able to access the funds previously. So we wanted to make sure that you understood that we could answer the questions that you had about those relative to family child care. And then I might just ask Jane and Tom, some of these questions are very specific to taxes, to business structure, to other fiscal accounting within the business, and how folks operate their business. Who would you suggest that family child care providers talk to get answers to their specific tax-related fiscal business questions?
Send me an email. Tom Copeland, here we go. Tom Copeland at live.com.
We have a lot of providers on the phone. I'm wondering too, should folks talk to their trusted financial folks if they have accountants, if they have people who do their taxes? And also, Jane, I know that in some states, Connecticut being one, there are people like you who and established networks who can provide one-on-one assistance to help them make decisions about what and how to apply. Do you want to say a little bit about that?
I didn't mean to imply that I want 6,000 emails, but the short answer is this: it doesn't matter what your business structure is. I've been talking about self-employed people. You might be a limited liability company, an LLC, a corporation, a partnership, whatever. You're still eligible for these PPP and EIDL programs. All right. I didn't go into those things because it just gets more complicated. So, but no matter what your structure is, you are eligible. So that's one question I don't have to answer. Yes, if you're using a tax preparer. Yes, if you're using a financial planner, or maybe your bank can advise you and provide additional information. Yes, maybe your local child care resource and referral can direct you to answers to their questions. Maybe there's some other resources in your community where you can seek out help. Yes.
Yes, and I'd like to just second that and what Tom has always told child care providers, and we tell our providers as well, that you should go and get professional tax help. And that they should be able to guide you and answer your very specific tax questions. But of course, we at our CCR&R network, child care networks, can help with those as well. And of course, Tom is an incredible resource always.
All right, we got a few more minutes before we hit the bottom of the hour. Then I'm happy to continue to answer a few questions after that. So let's see if I'm looking at this, do we have to pay back the PPP? No. We're going to get a copy of the slides. Look at my website. look at the sponsors' websites and look next week for that. Yeah, people are saying small business development centers, that might be another resource.
Yeah, that's what I was going to say. I think before you dive into too many other questions, maybe we can begin closing out. And again, I want to share with you that this webinar has been recorded. You see here that we have a website also set up that links out to All Our Kin, to Tom, to First Children's Finance, to the Small Business Administration, where you'll be able to find answers to the questions that you have. I also want to say that we do know that time is of the essence, and that's why we really wanted to get this information out to you. You know that you remember last time many of the funds were gone as soon as they were made available, and family child care providers didn't even get an opportunity to apply. So we wanted to make sure that you knew about these funds, that you know where to access them, how to apply, if you applied before, what your steps are this time, so that family child care providers can indeed avail themselves of these resources. The other thing I wanted to say about the Quality Assurance Center is we do support all 56 states and tribes, or states and territories and tribes. So if you wonder if there's an organization like All Our Kin, or if the R&Rs or some other organization is indeed providing this kind of technical assistance and support in your state or territory or with your tribe, please just email us and we can link you up with the person that you need to speak with in your state. And so, Jane, I think I'll turn it over to you really quickly before I turn it back over to Ellen.
Okay.
Is there anything
Yes.
finally that you'd like to add?
We had a slide that's at allourkin.org, and we just want to encourage folks to come and visit our website. We do have a live resource document posted with some of the COVID resources, as well as other resources at our allourkin.org website. And of course, we will also be posting things as along with this recording and the slides and Tom's slides from here. And please feel free to contact me if you have questions.
Thank you, Jane. And Tom and Jane are so generous with their time. They will stay on to answer some additional questions. And if you can't stay on with us, remember that we're going to collect the questions that are in the chat box. We're going to create a frequently asked questions document and other resources that might be helpful for you. And you can find those on Tom's website, All Our Kin, ours, ECTAS, and we'll make sure that they're available to you. And with that, I think, Ellen, I'll turn it over to you to say a few final words.
Thank you. I really appreciate that, Patty. I hope all of you have learned a lot and that you will check in on the recording, that you will go to Tom's website. I tried to take notes and I couldn't keep up, so I'm going back to the website and to the recording. I want to say special thank yous to Jane and Jessica at All Our Kin, to Patty at the Early Childhood Quality Assurance Center, First Children's Finance, and of course to Tom. I hope all of you are able to take advantage of these opportunities and that you'll be able to be open for business and caring for children, which is, I know, what you all want to do. So thank you very much and have a great rest of the weekend. Patty?
Thanks, Ellen. And again, please make sure to type your remaining questions in the chat box. If you want to stay on with us, Tom and Jane will be here to answer some additional questions. And again, on behalf of ECQA and our entire team, we just want to thank you for your hard work and the essential care that you're providing to truly millions of children and their families across this country. So thank you. And again, have a great weekend. And if you're logging off, all of this will be made available. And if you're staying on, Tom and Jane will be here to answer your questions. Thanks.
Okay, thank you. So, Jane, are there any more questions? Seeing none, okay, we're done. No, I guess there are some.
Absolutely. Oh, lots of thanks. Okay, I'm asking my question again. In business for 20 years, but didn't list it as a business until mid 2020. Do I qualify for any of the relief programs?
Yeah, once you started your business, once you started caring for children, I should say, you were in business. So you're automatically considered self-employed, no matter what. So the short answer is yes, you're eligible. You were in business because you were earning money, caring for kids before February 15th, 2020. That's the deadline. You have to have been in business before then, and you were.
If I haven't paid myself paychecks for 2019 and 2020, am I still eligible for the PPP?
Yes, because as a self-employed person, you're not paying yourself. Because any money you take in as a self-employed person is yours. You don't have to move it from one checking account to another. You don't write yourself a check. It's all yours anyway. For the purposes of this PPP program, we have to deal with a language called payroll. So in order to follow the rules, you have to show that you use the money for yourself, with this money. To show that, you write yourself a check or transfer it from one account to another.
We've had multiple questions about folks that have multiple businesses. So I have this business and that business, and do I apply for 2 different PPPs or just one, or how does that work?
Boy, that one I don't know the answer to. Wow, we're an hour and a half in, and there's a question I don't know the answer to. So send me an email. I will answer it that way, or never mind. I see it on the chat, so I will answer that, find the answer, and post that on the Q&A next week.
So I'm a child care provider, and I was open but closed in January of 2021. And do I still qualify for the PPP?
If you're permanently closed by the time you apply for the PPP, no. The PPP is an effort to help small businesses, and you're not a small business anymore because you closed.
Let's see, what else? Okay, so to apply through PayPal, do you need to have a personal or a business account with PayPal?
No. Okay. You can have your personal account. You don't need a separate business account.
Okay. So when looking at the PPP application, do I have to fill out the box that says times 2.5 plus EIDL?
Yes. That's the box before that says your average monthly payroll or profit. Then you're multiplying it by 2.5, and that tells you how much the maximum amount you can apply for. If you don't multiply by 2.5 and have a blank in the box, then you're saying you don't want any money. So there's no sense in filling out the rest of the form. Mm-hmm. Yeah, so you got to multiply it by 2.5.
Mm-hmm. There have been numerous questions about credit. So the relationship of credit and PPP and or EIDL. So Do I have to have good credit? Will this affect my credit? Will they look at my credit?
So there's two different answers. For PPP, no. The PPP program will give you money regardless of your credit score. It's not, let's see, you're not putting any assets at risk. You don't have to put down, no. They're not looking at your credit because the bank is automatically guaranteed that the SBA will pay them for this money. So no. For the EIDL loan, the answer is yes. The EIDL loan will look at your credit because they don't want to loan you a ton of money if you don't have the ability to pay it back, because you're going to have to pay it back. So for the loan, yes. Do I know what your credit score has to be? I don't. Do I know how much they're going to look into that? I don't know, but they will.
If your gross income is more than 2019 because of unemployment, and do you still get the PPP?
Unemployment does not get added to gross income for 2020. All right, so you might be eligible when you've taken out unemployment, or you might be able to show at least a 25% drop in your gross income for any one quarter in 2020 versus 2019. Now remember, we're just talking about the second draw right now. With the first draw, the PPP, it doesn't matter that your income went down or didn't go down in 2020. We're not looking at gross income for the first draw.
Where do you get the forgiveness for PPP?
Where do you get the forgiveness? You get it through your bank. You'll fill out a form that the bank will say, okay, fill this out, give us some more information. The bank will send it on to the SBA. The SBA will notify either the bank or you directly, I forget which way, but you'll then get a notice, by email that says you've been forgiven. Okay? It's not like church, but you will be forgiven.
Yeah.
So Tom, just talk a little bit about what if they don't get that email? How do they ensure that the forgiveness was sent on? Because if they don't get verification and they're not forgiven, what will happen?
Yeah, good question, because I didn't talk about this. Let's say something happened that you couldn't foresee. For some reason, you didn't spend the money on what you should have, or your forgiveness form got lost in the mail, got lost in the internet. The worst thing that can happen is, we're talking the PPP now, if it's not forgiven, it turns into a 1% loan that you'd have to pay back over 5 years. Now, at that point, let's say you got $5,000 from the PPP, and for some reason you got sick and you couldn't spend any of the money. You were in the hospital for 3 months, and you just couldn't spend any of the money for some reason, and you didn't have the energy to write yourself a check, or you didn't know you could do it, or you did something wrong, which is highly unlikely. But let's just say you didn't spend the money, the $5,000, when you should have. That turns into now a 1% loan. However, you have 10 months after after the 24-week period to apply for forgiveness. So you still have a long time where you could apply. But you forgot to do that. You forgot. The 10 months went by. You didn't even apply for forgiveness. Now it's a 1% loan payable back over 5 years. Now, at that point, you could say, holy cow, I don't want to pay 1%, even though that's not much. You could return the $5,000 if you still have it, and you don't have to pay any interest on it. Or keep it, and now it's a 1% loan. I think it's highly unlikely that you'll find yourself in that situation. Therefore, well, But to another part answer to this is you will need to go through your bank, your lender, because they're the ones who submitted the form. They're the ones that if they screwed up in submitting it or something, they're the ones who will know. You're not going to contact the SBA directly. So you go to your bank. You say, what happened? You know, I submitted my forgiveness. I'm waiting. How long should I have to wait before I get forgiveness? We don't know, because this round is a lot of money and it's going to take a while. We don't know exactly. So work through your bank on that.
Another question about banks. So is it better to apply through a bank, or is it better to go with an online institution? And should this person do both?
Well, you only want to apply once. Now, in my experience last time around, last year, many providers found it much easier to go through online. So if you're comfortable doing online forms, then I would say online. However, I guess I would first try your local bank. You know, I would give that a shot. But there were a lot of providers who had trouble with even not having separate business accounts, and the banks not even wanting to talk to them, and just they ran into a brick wall. And those people said, hey, I was able to apply online, and it went really, really smoothly. I really didn't hear many problems about applying online. Now, if I start to hear about them, you know, if you want to see what people are asking about this now, go to my Facebook page, because there's like 300 or 400 questions there already that I've been answering, and you might see people's reactions to what their bank has said. In general, online, I think it's easier.
That's not to say people didn't have success with their own banks, because we also know that people had great success with their banks. One of the things, just to reiterate from another one of our partners, is make sure that you're your own advocate. So don't wait for the bank to answer your questions. If you submit something and you have a question, make sure you call until that question is answered. And I think it bears repeating, Tom, what you said about one application.
Yeah, once. Do it once.
And I have an interesting question. So if the PPP is not taxable, how do I report it on my taxes?
You don't. You don't. That's why this is a great program.
Nowhere. Yeah, it's nowhere.
It shows up nowhere. Get the money. $5,000 comes into your bank account. Terrific. Terrific. That's it. The IRS doesn't know that you got the PPP. You don't share that information with your tax preparer. I mean, you could tell them, but watch out, because it should not appear anywhere on any tax form. The money from the PPP, the money from EIDL, it's not taxable.
And if I could just jump in, because a lot of people are asking questions about lenders and where to find the information. And we'll put this link in the follow-up email that you all receive. If you remember nothing else, if you go to this website will link you to the SBA that has a list of the lenders. It will link you to Tom. It will link you to All Our Kin. It will link you to First Children's Finance. It will link you to SCORE that has mentors that may be available in your communities to help you. So there are lots of resources at this website that will help you access what you need. And again, remember that if you can't find something, if you didn't catch something, you can also email us and we'll get back in touch. We'll get in touch with you and either route the question to Tom or to Jane at All Our Kin, but we'll make sure to get you what you need.
So if The link, if you go to the SBA, if the link on these websites for the SBA that tells you which banks are authorized to administer these loans, all right? You'll get a list of zillions of banks. Your bank may be on that list that they're authorized to process loans, but they may decide not to. They could, but they may decide we aren't going to. If your bank is not on there, I would still contact your local bank, because the name of the bank might be a little slightly off, or, try your local bank first. Look at this longer list of banks. Go to the next bank down the street if you want. Don't give up just because you get rejected at one bank. That's not the end of the world.
I have a question. Can I apply for the first draw PPP and the second draw PPP pretty much at the same time, or one right after the other?
No. You've got enough money now. You're rich. So why are you trying to get money twice? So no, once. First draw or second draw.
Okay, and I think maybe we have time for one or two more questions, or Tom or Jane, if you have closing comments or advice that you want to share.
I know there are still many, many questions. I think for me, I would love to know that everybody on this call and all family child care providers know and understand that they are absolutely eligible for these benefits, as well as many other benefits. If you have questions about eligibility, please reach out to me, to Tom, many other resources. So please don't think, oh, I'm just a family child care provider, I don't get one. No, you absolutely are a business. You're entitled to all of these benefits. And so please just contact us if you have questions.
Yeah, and I just also want to say, I bet you didn't wake up this morning saying, record keeping, oh, great. Application forms, terrific. I can't wait to fill one out. Tell me more. I love it. No, you love caring for kids. You want to spend time with kids. That's what you're about. And this business stuff can seem overwhelming. It's complicated. Is this easy stuff? No, this is not easy stuff. But it's important stuff. Half the job you have is caring for children. The other half is taking care of yourself. It's taking care of your business. And the more you're able to take care of your business, the longer you can be in business, the more money you can make. And now you'll have more time and be able to care for children over a longer period of time. And so that's what we want. We want you to be able to stay around, continue to provide great care for kids, and take advantage of these resources so that you can do it. So you guys work harder than I do. And so I appreciate all the work you're putting into being with kids. I certainly couldn't do it. So thank you again. Thanks for listening.
Oh, Tom and Jane, yay. Thank you so much. And thank you all again for sticking around for additional time to ask questions. If your question wasn't answered, please make sure you put it in the chat because we're going to compile those and send the answers out. Go to Tom's website, to All Our Kin. Answers to questions that you likely have today are there. So again, thank you, Tom, Jane, and thanks to the Office of Child Care for making this available. And thanks mostly to all of you for the work you do.
Bye now.
Bye, everyone. Thank you.